Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company on a day when we have seen what used to be known, although some people still call it, the big Australian really power the market higher. Let's have a look at where the local market is finishing the day's trade. Up by 1/3%. You can see some very solid gains were coming through around 12:30, but we have petered out a little as we await the resumption of US trade. Markets were closed in the US and also Canada, Brazil as well overnight, but we are expecting them to come back online tonight, with a few earnings as well from the likes of Medtronic and Palo Alto. But here, when it comes to the themes of the day, it was all about BHP's booming result, a rock solid result, if you will, when it comes to some of these themes of the day that we were following, and really being driven by copper. Copper outperforming iron ore for the first time in BHP's results. This as we move, of course, into the move for the data center demand and also the shift to cleaner energy. And the AFR pointing out that the surge you've seen in BHP's shares today at a record has added about $16 billion to its market capitalization, so roughly equivalent to the entire value of Qantas. This has also helped, of course, the ASX on its ascent today. And then we've also seen a little bit of a consumer comeback when you look at that ANZ Roy Morgan survey, just a slight pickup. But we also had the minutes released from the RBA's meeting, policymakers saying there is no preset rate path. Members, though, warning that inflation may stay above target without action. I had a really good chat to Ronnie Green earlier about the impact of the RBA minutes on the bond market, and he said even though the statement and, of course, the rate hike in February were quite hawkish, the bond market sort of reading these minutes somewhat as a little bit more dovish. Let's have a look at what we saw coming through in sectoral moves today. Kicking it off with the miners as BHP looks to close at an all-time high. $52.93. At one point it was at $54.20. Rio pretty flat, as was Fortescue, which actually lost about 1% today. South32 and MinRes, though, looking good. A quick look at the tech players as well. WiseTech dragging there, down 1.4%. Tech One and Zipco, though, up 3.5%. And when it comes to the consumer discretionary stocks, some very solid moves there, led by JB Hi-Fi, which was one of the front runners on the overall market today. Lovisa also looked really solid, along with Nick Scali and Temple & Webster, which of course came through with its earnings last week, rebounding from some of that sell-off. So it was about BHP. Its half-year profit rose, driven by higher prices for iron ore and particularly copper. BHP raising its copper production guidance for the year to 1.9 to 2 million tonnes, and the global miner entering a silver streaming agreement with Wheaton Precious Metals worth over $4 billion to deliver silver from Peru. Andrew earlier talked to the CFO of BHP, Vandita Pant. Here's how she said she described the results.
I would describe the results as fantastic, both operationally and financially. From an operations perspective, we did everything safely, most importantly, and production is up 2%, while we managed the cost discipline in such a way that unit costs are down 4.5% in spite of inflation headwinds of more than 2% and currency pressures as well.
All right, that's Vandita Pant, the BHP CFO. Getting into some of the other earnings, we had Judo Bank having a good session, finishing up by over 3%. Profit jumping for the half year. It's continuing, of course, to disrupt the big four. The investment management firm Challenger reported a stat net profit of $339 million. Shares, though, were sold off. Seek also sold off after it narrowed its full year 26 guidance. And Reliance Worldwide was punished today. It's had a challenging first half, hit by US tariffs and weaker demand in the US and the UK, while Sims raised its interim dividend despite swinging to a half-year loss. Shares down by 4.4%. Right, let's welcome to the COB our guest for the day, George Barboris from K2 Asset Management. George, great to have you with us. Maybe kick it off with what we saw from the RBA minutes. Were you sort of thinking maybe some of these were a little more dovish than what we saw in the hawkish press conference?
Yeah, Juliette, good to be with you. Yes, a little bit dovish. it's somewhat difficult to reconcile some of the logic from some central banks in the world, and the RBA is becoming one of those. So on the one hand, we can obviously see the issues with sticky price and the obvious contribution to that, no productivity growth. But there's some topics we're not allowed to discuss. But this one just felt a bit on the dovish side, which is it's not very consistent, and again, very difficult to reconcile the logic of independent monetary policy to be addressing with inflation risks going forward. I would have thought something would be a bit more succinct and a little bit more on the hawkish side. But nevertheless, we're just observers of this, and I'm sure the RBA have got to understand what they're trying to do. But the communication sometimes is just a little bit amiss.
Well, let's get then to the broader market momentum, and of course can't go past BHP with its rock solid, as we're saying, result. But you know, everything we touch on these days, George, is about AI, right? And really with copper delivering the best results, surpassing iron ore, prices for the red metal surging on this AI fueled demand. How are we putting all these pieces of the puzzle together?
Yeah, lots of pieces, lots of puzzles together. Very quickly, there is a value risk on play, and a broadening out, and BHP is part of that. So from a multiple perspective, going into the new year, it's obviously quite cheap relative to other areas, as it should be, because it's the way it's structured, and Rio Tinto for that matter. So there was value there. Obviously, that dividend and that cost efficiencies are really picking up, in the AI contribution. So AI as a contribution, it clearly, which was a tailwind for tech, is now a headwind for tech, and it's a tailwind for the broader economy and other sectors, healthcare, transport, financials, and very much large resources. So that's coming through. But beware, we haven't seen the AI, which we expect in the contribution to productivity gain, to come through in the macro data, predominantly in the US. That's backward looking. But these sort of earnings are a good sign of what it can do and what it will do, and a hockey stick approach in the years to come. So this is a good case in point that AI outside of technology is a good tailwind. And obviously, when it comes down to the special metal copper, it takes so long to invest and get a return on it. And obviously, no one has enough copper in their ecosystem. But basically, AI seems to be a good contributing tailwind for now, for mining and mining services for that matter.
What's the outlook then for some of these commodity prices? Because we know that the higher prices have helped the likes of BHP, for example.
Yeah, I'm going to quickly just reel it off very quickly. So copper bid upside before year end, zinc plateauing out the way it's looking because of what's going on in China. Bulk commodities, there's no real big tailwind going there, but just broadly holding up with a slight weakness. Energy prices, we think lower, gas higher, but Brent and crude lower. A bit of a mixed bag is what I'm trying to say, because we're at this late stage cycle globally. But the point is, in all of what I've just said there, AI is a contributing factor for assistance in the resource sector, and that also goes into agriculture and soft commodities, which I didn't speak about. But it's a mixed outlook for commodities, but it's the metals, and obviously, and I forgot to say precious metals. Putting silver aside, I can't understand the logic of what's happening to silver, but gold and any retracement appears a reasonable place for hedging portfolios as well, up to 2-3%. So a bid for gold and a bid for copper would be the most overgeneralized view 1 year forward.
All right, well, let's head to the US. It's going to reopen after that long weekend. Earnings season looking pretty robust there.
Yeah, robust earnings this season, coming through double digit in aggregate. Again, reinforcing. We've been waiting for this for a long time. We've been sitting there since the first half of last year looking for that broadening out of earnings. And we've had a really strong Russell 2000, that mid-cap, small-cap rally year to date. Regional US banks rallying quite hard as well. And we're getting to see that contribution of the, obviously the multiple, which have been quite reasonable in re-rating outside of tech and in general. And so I think that's been quite good. But year to date, small caps have been up around about that 9%. Very strong re-rating after many years of underperforming. So the earnings are coming through. The earnings sell-off, obviously, the sell-off of components of technology and the SaaS technologies, obviously, we believe has been overdone. The earnings are still coming through. But the point is, and this will be the risk, is that the multiples are much cheaper in certain parts of technology, even though the earnings are coming through. So when you tip it into the small cap or the PE segment and the PE credit segment that is basically loaning out to AI that doesn't have good cash flow, that will be the trouble area for investors towards the end of the year, but the larger companies should be okay. So good aggregate earnings. We're getting the rally that's more broad based in, again, small cap, healthcare, transport, consumer staples, etc. Financials, small cap financials, it's all benefiting now, that re-rating. But there are going to be some issues with the multiple collapse of some of these AI companies, and that will be problematic again and reinforcing those who have got gearing, and that seems to have been filled up last year in that PE credit segment in the US.
All right, really great to chat as always, George. Thanks so much. George Barboris there from K2 Asset Management. Getting back to stock specifics, the stock of the day was Seek. Andrew spoke to Mathan Somasundaram from Deep Data Analytics, Andrew Coleman from Team Invest.
Real risk here is that AI somehow takes away the rivers of gold from the network effect that the current occupants have. Of course, the irony in the case of the newspapers is we sort of think about the death of the newspapers, but the companies that own the newspapers, being News Corp and Fairfax here in Australia, of course, actually make more money now from their online classifieds business than they ever made from their print classifieds business. So from that point of view, again, it's a question of, where do you think that will fit? I think what's interesting about Seek, though, is of the three classifieds, online classifieds businesses, it has by far the worst stability of earnings, and that's because it's the most exposed to market movements.
The employment markets inevitably is going to get harder, and that means Seek's outlook will get weaker. So for me, I'm not trying to pick the bottom in Seek. It's a cyclical. You sit back and watch. There will be a time to buy, but that's not today.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, a great day on the markets. Thanks to BHP. Let's have a look at the leaders in the session. JB Hi-Fi also having an incredibly very solid session today, up by almost 8% there. Pro Medicus as well, starting to have somewhat of a comeback after being heavily sold off last week on its results. A2 Milk was up 5.5%. BHP at one point hit a record high, closed up by 5.3% to 52.93. And PEXA there is also in focus, and that is because it decided to exit its majority-owned digital solutions business, the business classified as held for sale and presented as discontinued operations. These stocks on your screen are the laggards. Reliance Worldwide hit after its result today. Treasury Wine Estate as well. Linus, Sims Metal and Reese. In the small end of town, Elementos had a good day, up by some 21%, as did Terra Metals, Premium Energy World, and the laggards in the small end of town included Botanics Pharma. Whew, don't know what happened there, down 40%, and Ecograph down by 7.3%. All right, tonight, US markets come back on. We've got US NAHB Housing Market Index, the US Empire State Manufacturing Index, and earnings from the likes of Constellation Energy, Medtronic, Palo Alto Network. George Barboris just telling us that he thinks US earnings season has been very robust. And then tomorrow, of course, earnings season continues here. We are going to get the likes of NAB coming through, also Netwealth, Suncorp, IGO, Southern Cross Electrical. We've also got a rate decision in the RBNZ, and Japan's trade balance is also due. Let's have a look at where the market has finished, up by 1/3% there on the SIBO 200. The ASX 200 has closed firmer by 1/4%, 21 points, 8,958. You don't want to get those numbers mixed around. 8,958. It's a little bit of petering out of some of those earlier gains, but still pretty solid result coming through from BHP, lifting the materials sector. JB Hi-Fi there lifting the consumer staples sector. We'll do it all again tomorrow from 9:45 a.m. Eastern. See you then.